ZETA Bulls. How are we feeling today? New all-time highs on ZETA Global. And we have a lot to unpack in this video today, friends. We have a lot to unpack in this video today. We got some earnings to talk about. We got some new interview quotes to talk about. We have a stock that is quite literally rip-roaring to the upside. Finally, ZETA Global is running to the upside, my friends. We are all realizing gains. There's no one out there that is not up on ZETA Global right now. If you've been buying in the past almost 1.5 years. So today, I want to talk about what happened at earnings. I want to talk about the interview with the CEO of ZETA Global, David Steinberg, that me and Nick Wolfmatica just did just last week. I want to talk about a new interview that Chris Greiner did and some quotes from that. And then I want to wrap up this video with where is ZETA Global going next? Where are we going next? I'm going to look at some charts. I'm going to give you my personal, brand new, updated, bullish price target. Not my neutral price target around $40 or so. I'm going to give you my bullish, brand new, bullish price target, guys. So we're going to do a little bit different today. If you own even one ZETA share, I need you to smash that like button because we earned it. We earned it. We earned it. We earned it. Smash that like button. And if you're not subscribing yet, what are you doing? What are you doing? We've been talking about ZETA Global on this channel where we just hit 7,000 subscribers. Thank you. Thank you for 7,000 subscribers. I love getting to do this. But we've been talking about ZETA Global for a very, very, very long time. We've talked about it in the ups. We've talked about it in the downs. We've talked about it in the sideways chop. We've been talking about it for a very long time. We interviewed the CEO now twice. We've interviewed the CFO of ZETA Global once. And we've hosted many live streams, many earnings calls, many earnings reactions, many earnings previews. ZEUS Weekly has been around almost 13 episodes now by me and Wolfmatica. We've been covering this stock nonstop. Some of you guys are probably getting sick of me saying the word ZETA Global. Unless you've been making money. Then you're probably sitting there, no, Ronnie. You keep saying ZETA Global, you keep following the stock, you keep us updated. You and Wolfmatica just keep on giving us the goods. All the breakdowns, everything that's going on with this company, all the exciting news 6 months ago, 9 months ago, 10 months ago. I know this further back, 1 year ago. Guys, we've been in this thing. We've been talking about it. And when you have a company where you have such high conviction, I've said this publicly. The last time I had high conviction in a company like this was Tesla. Tesla at around $20 a share. Tesla's around $300, hit a high of $400 and some dollars a share, guys. The last time I had this level of conviction in a company was Tesla at $20. And I did very, very well on that investment. And I've been pounding the table on ZETA, sub 20, sub 18, sub 16, sub 14, pounding the table. Why? Well, one is my passion. I like to do this. Two, I just want to make sure that no one misses what I believe to be a monster stock, guys. So again, if you're even on one ZETA share, smash that like button. If you're not subscribed yet, make sure you subscribe because ZEUS Weekly lives here. ZETA videos live here. And new stocks that we will continuously get into over months and years. Speaking of one, Voyager just made a video about it, and it's up 60-some% in the last month. 60-some% in the last month, guys. So if you want access to that, it's free on YouTube. All you got to do is subscribe. If you want to get alerted every time I drop a video, I stopped posting all these shorts to alert the heck out of you guys. I'm just posting long form videos and live streams now. Unless I do some other, short content that actually provides a lot of value, then I'll do that. If not, then I won't. So let's get into it, guys. What a last 2 weeks. Over the last month, we're up about 34%. Over the last 6 months, we're up about 70%. And we're over here on valuesnapshot.io. And we're just run through some numbers, run through some earnings, run through what I'm looking at, run through what they're doing as a business, guys, because it is big time. Okay. 70% in the last 6 months with a low of $14.55. Today, we closed over $29. We closed over $29 for the first time in 2 years. Think of that. We closed over $29 for the first time in 2 long years, guys. 2 long years. And you had a low around $14.55 during regular hours. It's been below that during, pre-market and stuff. But yeah, we've been talking around this stock from those $14 levels up to the $25 levels. And it's been consistent, been buying leaps, been putting my money where my mouth is, been loading the absolute boat. I probably hold, at this time, it's got to be close to 50% of my portfolios, guys. I won't lie. It's got to be about almost 50% of my portfolios because it's run so much. I had it priced around 35 to 40% of my portfolios, just how much conviction I have in this company. I did a very similar thing with Tesla, and it's just been ripping. It's been ripping. We're up good money on leaps, really good money on shares, even more good money on, the farther out leaps, the 20, the 25, the $30 calls, the leaps for 2028, guys. We're just cooking. We're cooking. I know you're cooking too. You're probably like, who is this guy? I mean, I know I'm a little bit more upbeat now in this video, but yeah, I'm just sitting down and making this video like just raw. Making this video raw for you guys and just giving you guys all my excitement. I am very, very excited as a Zeta shareholder. I think this is just the beginning. Just the beginning doesn't mean it can't pull back, but I think this is just the beginning in a long road of wins and wins and wins, not just for Zeta, but for Zeta retail shareholders. For any shareholders, honestly, but I'm worried about retail. I'm worried about us. We are retail. I want us to make money. I want us to kill it and provide for our families and do better, right? So, first time in 2 years, guys, that's huge. That's huge. It's huge. All right. So what's going on? Let's talk about earnings. Let's get the earnings AI summary right here. Zoom in on this a bit. So, key financial highlights. Zeta had their 20th straight beat and raise quarter. It came in $443 million, a 44% increase year over year, guys. 44%. Exceeding guidance by $23 million, 5%. Excluding M&A, revenue grew 28% year over year. So even without the acquisitions, they're still growing 28% year over year. And with them, like Marigold and stuff, they were growing 44%. Adjusted EBITDA reached $92 million, up 56%. And where is it at? One of my favorite ones. I don't even have it. What the heck, AI? You can't even give me my favorite one, the free cash flow one? Let's talk about it. Let's pull it up over here. Free cash flow. Where are we at? Oh, man. There it is. 2Q free cash flow of $58 million. 13.1% free cash flow margin. Up 220 basis points, or up 73%. 73% year over year, ladies and gentlemen. Massive. Like we said, their revenue grew 44%. They have a rule of 64 with acquisition, M&A. And then they have a rule of 49 without M&A, 20 straight beat and raise quarter. 8 of the top 10 verticals grew over 20%, trailing 12-month year over year. Consumer, retail, financial services, automotive, healthcare, all accelerating via Q1. Superscale customers grew 17% and ARPU growth of 17%, both ahead of 2028 model, where they're talking about $2.3 billion by 2028. And I think they're going to crush that. I think they're going to do that in 2027, to be totally honest. They also talked about how they landed 2 of 2. So basically, David said that when they went to Palantir, they went in there, he met with Alex Karp, they got walked straight into a meeting with 2 of the biggest advertisers in the world. They sat down and they closed the deal and they landed both of those. So they've cross-sold to two Palantir customers that are now Zeta customers. They haven't announced them yet. I have some speculation. I'll talk about that in this video as well. The two I speculate to be those two biggest advertisers in the world that they landed. And it's just amazing because people are saying, oh man, Ronnie, it's going to take so long. It's going to take so long for Zeta to, do you even understand how these things work and how long it takes to sell a company and convert them, not just from being a Palantir customer, but also a Zeta customer. And then Zeta comes out and has a partnership within less than a month and they sit there and say, okay, we met with two, we closed two. Met with two, we closed two. And they're the two biggest advertisers in the world. And they made, because of those, they now don't just have 51%. Let's go to this slide. They don't just have 51% of the Fortune 100 companies. They have about 52 or 53%, and that's straight out of David Steinberg's mouth from our interview. So they now have 52 to 53% of the Fortune 100, meaning they closed the gap somewhere in here. They have 12 of 15, 2 of 3 airlines, 6 of 16 insurances, 4 of the largest, right? So you see some gaps here. They have 3 technology and media companies they can still go after. No more telecommunication companies out of the Fortune 100. Automotive, 1 of 3. Financial services, 8 of 12. And then pharmaceuticals, 3 of 6. So basically what I'm telling you is they've landed 2 or more clients, and that fills a gap, maybe 13 of 15 now, 7 of 16, 2 of 3, wink, wink, 3 of 6 or 4 of 6 now, 11 of 13. You get the picture, right? So they have, David's given us all these clues, all these good little things during our interview last week. If you haven't watched that, I'll leave that link down in the bio below. You can go check that out. Me and Wealthmatica Nick, we sat down with David for about almost 30 minutes and got a lot out of him. We answered a lot of our questions, and we didn't just give him the easy cupcake questions. We gave him some hard hitters. We talked about how, hey, there's some people out there calling your numbers smoke and mirrors. And he just sat there and he said, free cash flow. Free cash flow will tell you everything you need to know. Okay. And he's dang right. You can't mess with free cash flow. And you definitely can't mess with free cash flow for 20 straight beat and raise quarters. But anyways, let's go back to some more highlights before we move on. Adjusted EBITDA crushed it. Revenue crushed it. My favorite part, guys, my favorite part right here. Zeta Global has not been profitable on a GAAP basis for 4 straight quarters. There's a lot of hedge funds out there that will not invest in a company until they're profitable for 4 straight quarters. You cannot enter the S&P 500 unless you're profitable for 4 straight quarters. And I know all of this because I was an investor around $20, not super early, but pretty early in Palantir. And I understood that they had to do that to enable to get into the S&P 500. They also had to do 4 straight profitable GAAP quarters of EPS and net income to also get all these big money hedge funds and stuff to say, okay, we see you. We're going to go ahead and invest in you. What did Zeta Global just do? Well, they just did their second of 3, 2 of 3 of the last quarters. They've come in with a GAAP EPS and GAAP positive EPS and GAAP positive net income. Last quarter they didn't because mainly the Marigold acquisition, they had a lot of stock-based compensation, which they actually still had a decent amount of stock-based compensation this quarter due to what I believe the Marigold acquisition, which I do believe that's going to fall off for the next 2 quarters and it's not going to be a problem anymore. And the reason I believe that is because they were guiding for GAAP EPS for fiscal year 2026 of 2 to 4 cents. They just upped it to 9 to 11 cents. 9 to 11 cents, guys. So they just said, no, we're not going to do 2 to 4 cents. We're not going to be barely profitable this year on GAAP EPS. We're actually going to crush on GAAP EPS. We're going to go to 9 to 11 cents. And if we come back over here to value snapshot, right, we can look on an annual basis. We can look here at EPS. And what do we know about EPS? Well, last year, they were negative 14 cents on GAAP EPS. And now they just told us, actually, we're going to be 9 to 11 cents on GAAP EPS. And they sandbag. They sandbag so hard. So if I believe they probably get to closer to 15 to 20 cents of GAAP EPS. I think they probably up it again next quarter. I think they get closer to 15 to 20 cents of GAAP EPS. And we'll be looking at a 14-cent negative GAAP EPS to around a 15-cent or more positive GAAP EPS. And that's a huge, huge inflection point flip. Huge flip, guys. Huge flip going from negative 14 cents 1 year, now up to 15 cents or more of GAAP EPS. Massive, massive. And that's what Wall Street wants. Margins going up and to the right on gross, operating, net margins, free cash flow margins, gross profit going up, operating income going up, EPS going up, net income going up, all of it. Look at it on a quarterly. Look at it on a quarterly. You see, we were starting to up. We had one and then we had three negative. We had one, then we had one negative. Now we had two of the last three positive net income, two of the last three EPS GAAP positive, gross margins, operating margins, net margins, free cash flow margins, gross profit, all of it going up and to the right. Return on invested capital, return on equity, return on assets, all of it, guys. EBITDA is going up and to the right. It's looking phenomenal out here. Phenomenal. All of the financials, all of the key metrics that you want are going up and to the right. Cash flow, especially, guys, the most cash flow that they ever printed in a quarter. The most, 64.36, guys. On free cash flow, on operating cash flow, free cash flow per share is crushing it, guys. Killing it, killing it. And again, they had stock-based compensation. They had it pop up a little bit, right? And again, I believe 53 and 52 million, which is more, a lot more than Q1 and Q2 of 2025. Again, I believe it's because of stock-based compensation pay packages to senior leadership at Marigold to make sure they stay on and they train up and they make the transition into Zeta Global, Marigold and Zeta Global, the transition into each other, smooth, simple, and easy. That's what we want. That's what we want. So, okay, they had to give a little bit of stock-based compensation, but they are getting leadership to stay on and they're making this expansion into Europe with the Marigold acquisition super simple and easy. So I think it's worth it. I think it's worth it. And simply, if we just go to Chart Builder here and we punch in revenue, and then I'm going to punch in SBC. So we'll look at revenue. We'll look at SBC. If we check this out, what's going on here? What's going on here? Well, revenue is going up and to the right, and the amount of and the amount of stock-based compensation, which has been staying in line for the most part, 52.64, 52.16. Now, currently, after 2 years, 53 and 52. So stock-based compensation is going like this, or it's going like this, up and down a little bit, but it's staying in this simple line if you look at it across. But what's revenue doing? Revenue is going up and to the right from 195 million to now 443 million. Let's round up. Guys, they did 52.64 then. They did 52.12 now. Less, but the revenue is double, over double. Stock-based compensation as a percentage of revenue is important. And this is telling us that, guess what? The company's getting a lot better and they're diluting us a lot less. And again, I think these are mainly around the Marigold acquisition. And I think they will get back to this 40-some consistently or lower. And they're buying back stock, guys. They're also buying back stock. So again, a lot of people want to beat that up and talk about bear because of the stock-based compensation. Guys, like Palantir did the same dang thing. Palantir did the same thing. You know what happened though? Let's talk about it, Palantir. Let's talk about it. Let's talk about it. So Palantir charts, chart builder. Let's go revenue. Let's go SBC. And what happened? Well, now remember in 2020 and 2021, 2022, this was the bear market. And this one they're like $5. Look at this. Look at this. Look at the stock-based compensation. Massive in 2020. Terrible. It was more stock-based compensation than revenue. But then what happened? It fell or stayed in line. Look, 778 in 2021, 684. Basically in line. A little bit down, but basically in line, just like Zeta. But look, 1.54 to 4.5 billion. The revenue way exceeded what they were doing, and they just went like this with stock-based compensation instead of following revenue. And when you do that, when you aren't following revenue with stock-based compensation, then obviously stock-based compensation becomes a smaller and smaller and smaller percentage of the overall revenue. And that's what you want. That's what you want as a shareholder. Because it's more important about what the company's doing, where they're going, how they're growing, everything, than, oh my gosh, they did like 1% stock-based compensation. Oh my gosh, the company's terrible. I don't want to invest in it. What? Come on, guys. Come on. So going back, this was the biggest part right here. This 9 to 11 cents a free for fiscal year GAAP EPS. That was the biggest thing. Biggest thing. And they came in and did 3 cents. You know what's funny? The stock went down. The stock went down after earnings. It went down, guys. Down. It went down. The stock went down like 14%, but it's because the craziest thing happened, guys. Robinhood, Public, all these brokerages reported that Zeta actually missed their EPS. They missed their EPS because they were showing for GAAP EPS expected, they were showing the non-GAAP. They were showing the non-GAAP expected as the GAAP expected. So Zeta did 3 cents, but they were expecting 15 cents when it was really analysts believed negative 3 cents of GAAP EPS and Zeta did 3 cents of GAAP EPS. So complete inversion of what analysts thought they were going to do. They crushed. They crushed, guys, crushed. And so the stock went down. I bought more, went down 14%. It was at around 10%. And then it climbed back. And guess what? In the last 2 weeks, analysts have come out. Analysts have come out. Look at this. Look at this, guys. Analysts have come out and raised price targets. So August 5th, KeyBank raised price target to 27 from 22. RBC raised to 31 from 29. D.A. Davison raised to 32 from 30. William Blair downgrade Zeta Holdings to a hold. I didn't see that one. That one's crazy. You're crazy. What price though? It doesn't say the price. $29. Okay, cool. They downgraded to hold. They don't believe in it. They don't believe they're going to continuously do it. And a lot of analysts don't. A lot of analysts think this is going to be a massive growth year. And then all of these potential 800 plus customers and clients that Palantir has, analysts just believe, I guess, these haven't changed since the Palantir partnership, since the OpenAI partnership, since the Snowflake partnership. These revenue growth rates have not changed. So that should just tell you, yeah, I'm not trusting analysts. I trust Ronnie. I trust Nick because we actually are keeping up with the company at a rapid rate. Analysts aren't even upgrading. How do you not even upgrade your growth rates on revenue when literally they partner with Palantir and now they have access to over 800 customers? They're not going to land all 800 customers, but they already landed 2 of 2. They already landed 2 of 2. They're the largest advertisers in the world. And they just went from 51% of total Fortune 100 to 52 or 53%. So it's already being accretive. It's already being a good thing for Zeta with a 7-year Palantir partnership. And Palantir wins and Zeta win. They win together. And again, Zeta now has access to over 800. And they're just sitting here saying, no, we think they're going to drop to 16% revenue growth and 14%. Then low teens? Low teens? Even though David Steinberg, the CEO of the company, is saying that he believes that they're going to grow 20% compounding annual growth rate for their revenues without M&A for the foreseeable future. For as far as the eye can see, he's saying that he believes they're going to grow 20% without their acquisitions. Excuse me? And guys, the more Palantir partnerships they get, the more they spin into business intelligence, the more potentially they have this Athena OS and they have this one sale product to get customers spending more on Zeta faster instead of this one channel, then that one channel, then this one channel. Like they're buying these different channels at different times. Now it's like, hey, we can give you all of Athena OS and it has all the channels. And Athena OS hasn't been confirmed yet, but we believe that at Zeta Global Live, we're going to get Athena OS announced, but that's speculation, so don't say anything, but whatever. But me and Nick really believe that they're probably going to have Athena OS and it's going to be this big reveal and it's going to be a huge thing. Just like last year at Zeta Global Live that I was there, they revealed Athena. Okay, so yeah, so we got this thing happening potentially. And if that's the case, and it's a one product, instead of putting all these channels that they can cover for a company and they put it into one ecosystem as a business intelligence or operating system for a company, that means that each of these individual channels are now wrapped into one package that they can sell to their customers and clients, active customers and clients that they already have, new customer and clients that they can get from Palantir with better margins, more revenue, and getting more wallet share overall from those clients, current and new. And you just think they're only going to grow 16 and 14 and low teens? I think this company continues to grow minimally 20% annually for the next 4, 5, 6 years. There might be a blip in 2029, but I mean, if they get more clients and everything, then I think it's going to be good. Because 2028, you got the presidential election and they get massive amounts of money. Obviously, end of just in a few months, we're going to be kicking off the midterm elections, and that's going to be huge money for them. So yeah, and I'm just going to be honest, guys. The funny thing is the stock was just like 15, 16, 17 bucks a few weeks ago. And these profit targets or these analyst price targets were, mid 25 to basically 29, 30. And now they're all upgrading, but it's still not enough. It's still not enough because my neutral base case is that this company is a $40 to $45 stock. And again, I'll tell you what I believe. I'll just tell you right now. Here you go. I'll just tell you that right now. Smash that like button if you're a Zeta investor. If you're not, if you like the content around Zeta, smash the like button anyways. I believe we can run this, okay? We can run this. Let's run a discounted cash flow model, okay? 5 years. This is their trailing 12-month revenue. I believe that they grow 20 to 25% revenue growth rate over the next 5 years. So we can just call it 23%. I believe. Now here's the craziest thing, guys. They just upped their revenue guidance for the year. They just upped it $33 million. And on our interview with David, he literally said, he didn't say it like this, so this wasn't the quote exactly. I posted the quote on X, go follow me there. But he basically said, most companies are at the point where they can up their revenue by 32 to 33 million, basically exactly what Zeta Global just did. And they can have 60% of that fall to free cash flow, meaning 60% of that 30 to 33 million will fall to free cash flow, meaning 60% free cash flow margins, guys, if I need to spell it out for you. And he said, I think that's exactly where we are at. So they just up guidance on revenue by 33 million, and he's basically saying 60% of that is accretive. Their current margins are 13%. So the more deals they land, the more wallet share they take, the more this free cash flow margin is going to go from 13, 14% up to 16, 17, 20, 30? 30? I don't know. So let's just say over 5 years. Let's say a little conservative. Let's say it gets up to 18%. And then let's just say they have a current, let's go with the current 32 terminal multiple, which again, if they're growing 20%, they're getting more deals from Palantir. There should be no problem. They can't have a 30, 32 terminal multiple at the end of the 5 years for free cash flow. And honestly, if they're really growing heavy, like 25, 30%, they could easily have a 40 to 50 terminal multiple. Guys, that puts them at a $71 stock. Not 5 years from now. Today. 5 years from now, that puts them at a $102 stock, basically. So from today's price at $29.15, gives you 144% upside. Again, they got to hit these numbers. They got to grow 23% revenue per year, free cash flow margin 18%. But this is my bull case, and I still think it's pretty dang conservative, guys. I think it's pretty dang conservative. So yeah, man. I mean, and again, this isn't financial advice. You got to evaluate. You got to look at these valuations yourself. And just because there's a valuation doesn't mean that the market's going to price it as that. As we already know with Zeta, guys, they've been sitting down at 15. They've been sitting down sub $20 for a long time. And just based on the marketing business alone, they're a $30+ stock. They've been sitting down there for a long time. So just because there's an undervaluation doesn't mean it's going to be, doesn't mean that the price action is going to tell you you're right now. Usually it takes a while. Look at Microsoft. Microsoft was just $350 not long ago. Nobody wanted to touch it. Now it's back at 500 like that, guys. So yeah, around 70 to 72 bucks is my bull case for Zeta over the next, really, I'd say for 2027. For 2027, I could see by the end of 2027 going into 2028, we're 70+ bucks per share. Okay. And where do I think this company can go long term? I think it could be a $100, $150, maybe $200 stock. And that puts them right around between a $25 and a $50 billion market cap. And again, right now they're about a $7.3 billion market cap. So They have a lot of upside. A lot of upside, guys. A lot of upside. Any good quotes in here? Yeah, the video is kind of running long, so let's move on to yes. Who do I think the two clients that Zeta landed are? I think these are my two predictions, okay? I could be completely wrong. But I think one of them is Stellantis, and Stellantis brand is Jeep, Ram, Dodge, Chrysler, Fiat, Maserati, and more. Okay? So think about Stellantis. They own a lot of car brands, meaning that they are doing a big amount of marketing and advertising. Could they be one of the biggest advertisers in the world? Absolutely, guys. Absolutely. So Stellantis is my number one pick for one of the two Fortune 100 companies that are currently working with Palantir that they landed. My second pick is going to be Lowe's. Now think of Lowe's. They're really up and coming. They've honestly overtaken Home Depot, and they're also doing a lot of advertising to businesses and to normal people just trying to repair their house, do something, right? Blah, 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 whatever. And this would mean that currently they only serve one of three largest automotive companies. This would get them to two of three of the largest automotive companies. And then Lowe's would be that, what? It would be the consumer and retail. So they get like the 13 to 15 of the consumer retail companies. And then another thing that they said, I'm going to give you another big thing here. Since if you don't follow me on X, follow me at TheRonnieVShow, so you don't miss any of the stuff I post over there. Then you don't have to wait till the video comes out and you can just know. David said, give us another interesting clue in the interview. Zeta recently landed two new streaming clients whose businesses are driven by advertising rather than subscriptions. So my two guesses here is probably like Tubi and Pluto TV. They don't make people pay for subscriptions. You can just go on there and watch it for free, but you're going to get ads. So these are my two picks. And then if it's not them, others on my radar: Roku, Zumo, Samsung TV Plus, and Vizio. But I picked Tubi and Pluto TV. Who they landed as well. Smaller, but still relevant. Okay. Guys, the charts are looking super sexy. Super sexy. If you don't know technical analysis, if you don't know ball in TA, then this is a cup and handle. A cup and handle is a charting pattern, some voodoo. What it really just means, guys, is that you've had this long base of consolidation dating back to 2024. Long base of consolidation dating back to 2024. And it's just a fancy way of saying, hey, you've had all this consolidation. Now you're breaking above this consolidation. When you break above this consolidation, what typically happens? Consolidate, and then you break out. And there's a saying for this: the longer the base, the higher the space. Meaning that we've had all this like reject off resistance, reject, and now we're just breaking right through that. And that's called momentum. That's called buying pressure. That means all this previous resistance, it's just punching right through all of it. Meaning, more than likely, guys, okay, you might get a retest back in here around 23 to 28 bucks. You might get a retest back in here. If it gets down close to 23, I'll probably nibble a little bit more on some leaps or some shares. But I mean, my position's fully built, as you guys know, like I already said, over 50%. That's crazy. So this was previous resistance here at 28.50. We are now at 29.15. We do need to close the week above 28.50. If we do that, then yeah, things are going to go very, very good. The options market saying $30. I think maybe $30. Then we get a pullback back in here before we go to 35 and then 45, guys. If we look at a monthly chart, that was a weekly chart. If we look at a monthly chart, we've been talking about this. We've been sharing this for a very long time. What is this? Well, this is the uptrend line. Every time it came back here, look what happened. It bounced and rejected. These are the best times to be buying. These little green arrows, these are the best times to be buying. Then we had this downtrend. Guess what? We broke out, we retested, and then we came and pushed higher. And now we're rolling. We got a bull trigger. This is my personal indicator that I created, helping me and helping others. You can get this, you can get my indicator suite, the Matrix indicator suite in the High Five Collective if you wanted to. Just helps you do momentum trading, so on and so forth. And then we also have the investing community. If you want access to the investing community, I'll leave that link down in the bio below. This is where I say, hey, I'm buying Zeta, I'm trimming Zeta, I'm selling Zeta, I'm buying Voyager, I'm trimming Voyager, I'm selling Voyager. I give you all of my investment portfolio, buys, trim, sell, ads, all of it. And we're currently up over 70% year to date. Over 70% year to date. We are currently up in the one high conviction portfolio that I run. We took it from sub 50K to over 80K. Guys, sub 50K, we started this thing in like April or May, we started this thing. In less than 6 months, we've taken this portfolio, thanks to the help of Zeta, Voyager, Oscar, Nebius, a lot of these stocks that we've been pounding the table on, we took it from sub 50K to over 80K. Over 70% gains, guys. I mean, we might have hit 90K today. I don't even know. I didn't even check it. It's such a crazy day. But whatever, I digress, whatever. Come join us. Come join us, guys. We're going to keep building that high conviction portfolio. I'll show you how to run a proper portfolio that's high conviction, not just 30 freaking stocks. And if you hit one, it's like, yay, but it's like you don't really win. If you have conviction, like I do in Zeta, and you put your money where your mouth is, and you do that a couple times, sure, you might have one or two that don't work out. But the ones that do work out, they're going to go big. They're going to go big, and they're going to go big for you, and then you're going to change your life. You're going to change your life with these gains, guys. So if you want access to that, I'll leave the link down in the bio below. High Five Collective. That's the investing tier. We also have a trading tier, and then we have a combo tier, Platinum. It's all my indicators. It's investing. It's trading. It's more access to me. You can ask questions, ask for charts, whatever. Guys, I'm so freaking bullish. Okay? Should you be buying Zeta here at 29.15? Look, if you're going to be buying at these levels, you got to understand that we might pull back. And if we might pull back, I don't want you guys sitting there being like, what the heck, Ronnie? You said it was $40 stock, blah, blah, blah. It doesn't mean it's going to go there today. The best thing you can do is dollar cost average. And honestly, the best time to be buying isn't right now. Everybody's talking about Zeta again. Everybody was talking about Zeta at 25. Everybody was talking about Zeta now. When Zeta was at 14, 15, 16, 17, 18, 19, 20, nobody was talking about it. Me and Nick were talking about it. Well, Mathematica, me and him were talking about it consistently, but a lot of other people, they weren't talking about it. Because a lot of people talk about this stock only whenever it's running, only whenever it's doing good. But we want to keep you up to date, and we want to stay up to date on what's going on so we can keep you guys up to date, and so I can stay up to date because I got a lot of money in this stock. This is over 35, 40% of my position. My portfolio, my investment portfolios. Of course, I'm going to stay up to date on this stock and everything they're doing. And make sure I keep that conviction. I don't lose that conviction. Got to keep that conviction. So, yeah. Hope you got value out of this video. This is a fun video. I just riffed. Just riffed it with you guys. Stay tuned. Big interview coming up this week. Big interview. Another interview I'm doing with another CEO. Yeah, that'll come out later this week. And yeah, hope you guys enjoyed this. Do me a favor, hit that like button, hit that subscribe button if I've brought value to you. And I'll catch you guys in the next one. Take it easy.